Hey everybody, I hope everyone is doing well and had a good day. Today we're going to review the E-mini S&P 500 5-minute chart for Monday, August 24th, 2026. We'll check the daily chart so we have some higher time frame context and we can manage our expectations going into the day. We had this big bull breakout above the trading range to the left, went sideways for several bars and then reversed down with a bear micro channel, which pulled back, got a second leg down. Then we had an inside bar trading range day on Friday. Now at this point we have a bear breakout, a pullback, a second leg, gap up, doji bar, implied pullback. So if we continue down, that'd be a third push. 1, pullback, 2, pause, 3. And we're testing near support, the breakout point, after this bull breakout. So with Friday being a trading range bar, there's probably buyers below, and it'd be a third leg down, testing near support. But the buyers may not come in directly below the prior day's low. Traders may wait to buy closer to support, like Thursday's low or close, or this breakout point from June 15th. The downside here is probably limited, but also the upside is limited. It's a tight bear channel with no real decent buy signal bar. We probably have to go more sideways and get a trendline break before reversing back up. On the 5-minute chart today, we had a gap down going into the day. Strong bear breakout bar on bar 1. Now it's getting below the prior day's low, well below, so we're probably going lower. Strong breakout. It's a gap down and follow through. Technically, if you look at the 5-minute chart, this is a continuous micro channel, no pullbacks since bar 77 broke out. So micro channel, including the gap down and follow through on bar 1. The market's going lower. The first reversal attempt is probably going to fail, become a bear flag. The bears are probably going to get a second leg down. And then there's the magnet below. This is Thursday's low. A pause bar 2, unlikely to reverse bar 1. There's probably sellers above bar 2, and once again, second leg down, likely. And then 3, a strong breakout bar. This is good for the bears so far, but we have a sell climax with bad follow through, another sell climax with only, maybe a 20% of the bar breaking below the support. So let's see, can the bears successfully break out and get a follow through bar below Thursday's low? And then instead, we got a reversal up on bar 4, a pretty strong reversal. Bar 4 is similar in size to bar 3. Now it's still technically a bear micro channel. So this first reversal attempt up on 4 is probably going to fail to go very far, and still the bears are probably going to get a test of the lows, the second leg down. And then bar 5, an inside bar. So now we've gone sideways for 4 bars. Trading range bar 2, big down, big up, and then an inside bar. Still technically no breakout. We still have lower highs through here, probably sellers above. But the traders who sold bar 3 are trapped by the reversal, and that creates support. So 4 and 5 may get a second leg up, but also the big sell-off is probably going to get a second leg down. Trading range bar 6, expecting sellers above and buyers somewhere below. Outside down 7, but it looks like the market's been in a trading range for 5 bars. So still probably sellers above and buyers somewhere below. Bears are hoping it's a bear breakout, pullback, low 1 short, trend resumption, but big outside bar in a trading range. There might be more buyers below. And we started to go sideways for a lot of bars through here. This is disappointing to the traders selling. If you sold anywhere, if you sold down here, even if you sold the pullback, the market's now going sideways. You're hoping for trend resumption and a breakout to a new low, but instead the market starts going sideways for a lot of bars. So we're getting closer to 50-50 as far as breakout direction. And if you're a bear, you're selling far below the moving average, the market's going sideways. That's not what you want to see. If you're selling at a discount far below the EMA, you want to see momentum. And if you don't see momentum, then it's hard to make an argument. It's hard to form a premise based on logic when you're selling so far below the moving average and the market's going sideways. Breakout bar 13, looks like the bulls are getting a second leg up, but 13 is bad context. You look to the left and the market's testing resistance. So as strong as bar 13 is, it's just possibly a second leg trap. Leg 1, pullback. Leg 2, testing resistance in a trading range. Small follow-through bar, which is good for the bulls. It's technically is a bad stop order sell signal, so there's probably buyers below 14. Maybe the bulls can buy below and get a scalp, but just not a good location for buying here. If anything, it might be a bear breakout and then a double top bear flag. 7 and 14, a double top. Bears see it as a big low 2 short. 15, another trading range bar. We broke above bar 7, but found sellers. We started going sideways for a lot of bars here. So another tight trading range, but now testing closer to resistance. I said possible second leg trap, bull breakout, pullback, second leg, and then we're going sideways. And then big picture, bear breakout, possible low 1, low 2, slightly higher high, double top, bear flag, probably sellers above bar 17 here. The tight trading range continued. We found sellers above and then a bear breakout 19. I think 19 is a reasonable stop order sell. It's not ideal because it's forcing you. If you're going to sell bar 19, you're entering right in the middle of the trading range, but you have the bear breakout, a two-legged pullback, and then possible resumption down. The bulls just got trapped buying up here. Now we have a strong breakout bar 19. The odds are 19 will get some kind of second leg down. I'm always looking for leg 1 equals leg 2 measured move targets, and that's what bar 19 reached here on the low of bar 23. And then you look to the left, we're testing near support. Thursday's low, the bar 9 low, still slightly above the close of bar 3, but you can imagine any trader that sold the close of bar 3 scaled in higher, they're probably disappointed with the follow-through. Anybody selling bar 3, they're selling momentum far below the moving average. Their risk is big. They're disappointed with what followed. And if a bear sold a close and scaled in higher, the sell-off is giving them an opportunity to exit at least at break even and then maybe with a profit. 23, outside up. It's a strong bull bar and the context is good. It's a double bottom with bar 9 and with bar 4. And it's at support, the bar or the Thursday low. And it's at support in this trading range from today's price action. Bears will probably exit above 23 and bulls can buy. It's a situation where it's only one bar, but it's probably always in long 23. One thing that helps me think about stop orders, you can think about it in two ways. You can think about the perspective of the traders, in this case, buying back shorts, and the traders who are buying to go long. So you can argue it's difficult to buy to go long here because tight bear channel from bar 18, enough momentum, the first reversal up here might fail, the bears might get a second leg. That's fair. However, you have to think about both sides. And if you're a bear, do you really want to be staying short after you get bar 23, a strong bull reversal bar at support in a trading range? The bears had the argument in the beginning of the day, strong sell-off. Maybe it's a bear trend and maybe we'll get a big second leg down. But then we went sideways for a lot of bars. We ended up going sideways for about 20 bars. And when the market goes sideways for 15 to 20 bars, breakout direction becomes closer to 50-50. The market's in breakout mode, and the bears may not be as in control as you once thought. Really, if you take away, not that you want to ignore these things, but if you take away the gap in bar 1, we've been sideways since bar 2. So the market's simply in a trading range here, and it's testing support. So traders are buying down here. You can see that with bar 23. Strong breakout bar 24, strong reversal up. 24 is testing that resistance area again, so we may hesitate here, but strong enough reversal. The first attempt back down will probably fail. This will probably get some kind of second leg up. We paused for a bar or two, but the bulls continued here in a micro channel. Traders can argue 3 legs up, 1, 2, 3, not an ideal location to be buying. However, do you really want to sell after a 5-bar micro channel? The odds are the first pullback will lead to a bull flag and a second leg up. Plus, bar 1 is currently the high of the day. That's a magnet. Market's probably going to get there. Reversal bar 28, but low probability short. Once again, you can argue that it's a wedge, so 3 legs up, testing a channel line. So you want to sell, but you have to look at the context. And if you're selling here, you're selling after 7 or 8 consecutive bull bars, and that's low probability. There's probably buyers below these bars, at least looking for a scalp, some kind of second leg up. We trigger the sell, we get the second leg up. Now 31 breaking out, but breaking out above bar 1, which is probably resistance. We can also look at it yesterday with the gap down. Just imagine the gap down is a bear breakout. There are some breakout points. We'll just focus on this first one here. The bar 61 low. The market gapped below that low, and that becomes resistance. You can actually see the reaction on bar 31. Market got there and then began to pull back. So there's some resistance here. Can the bulls continue to break out here? They have a breakout bar 31 above bar 1, testing this breakout point, but then they're not able to get a follow through bar. Strong bear bar, but inside bar in a tight bull channel. There might be buyers below. We may have to go more sideways before reversing. But in the big picture today, it looks like it's a trading range day, not a bull trend day. So as strong as this swing up is, we have to look at the bars to the left, and the market's failing to break out above all the bars to the left, and this looks like a trading range. Another pullback and another leg up. Now it might be 3 legs up here, 1, 2, 3, testing resistance. And then a strong reversal bar, 35. Now in 35, it's a strong enough signal that bulls probably exit below it. It's kind of similar to bar 23. If you're long here, you probably don't want to stay long. Even 32, even though it's a tight bull channel, just like this was a tight bear channel. 32 is a reasonable bar to exit longs below. It's a low probability short, but you have good risk reward, and it looks like the market's testing resistance in a trading range. Same thing here, 3 pushes up. Small signal bar, great risk reward if you sell 35, but not yet high probability because you're selling against a tight bull channel and the signal bar is relatively small. But the signal bar is strong, the context is good, 3 legs up to resistance. Overall, it's a trading range. So I think bulls probably exit below 35 and bears can sell. If the bears want higher probability, they can wait for a breakout. A pause bar and then a breakout bar 37. Now bears can sell with higher probability. If you sell 37, stop goes up here above 35. The risk reward gets worse, but you've increased your probability. And the odds are this will get some kind of second leg down. We got 3 pushes up to resistance in a trading range, and now we have a bear micro channel. The odds are there's sellers above 38. You can sell the close, scale in, stop at least above 35. 39, reversal bar, but bad buy signal. Same with 40. Is bar 40 going to reverse the bear micro channel? Probably not. And it's occurring in the upper third of this overall range. So this is still the sell zone of the trading range. If anything, there's probably traders selling above bar 40, scaling in higher. bar 36 is a breakout point. I was going to mention that on bar 37. We didn't quite get there on bar 38, but that's probably an area where traders are looking to sell. And then the bears get a second leg down. We have a tight bear channel. Technically, we pulled back bar 41. The tight channel, it's a breakout on a higher time frame chart. It's probably going to get a second leg down. But look to the left. Market's now testing support. I had this line drawn earlier, here or here. Why is this support? Back here, I said it was probably resistance, and it was. Back here, bar 7, tested that. Bar 2 high, reversed down. We tested it again here. Found resistance, reversed down. I thought we'd probably at least hesitate here, and we did. But eventually, we got the bull breakout, and that creates support. Anybody selling here did something reasonable. Traders who sold here made money. Traders who sold here made money. Traders who sold here are expecting to make money. This is the top of this range at this moment. The problem is the momentum. Strong breakout bar, strong follow-through bar, little overlap. The odds are we're going higher, at least to up here. We ended up going a lot higher. So that creates support, trapped traders. Anybody selling here gets trapped by the rally. So I expect when the market gets back here, it's probably going to bounce. But now it's a tight bear channel reversing down from the top of the range. So I expect any rally or any bounce to be minor and basically to become a bear flag and then lead to another leg down. Strong breakout bar, 44, but fairly big tail. First trend line break of this tight bear channel. Strong enough bar, you can expect 44 to get some kind of second leg sideways to up, but I'm still expecting it to be a minor reversal. In the big picture, you look at the context, it's a tight channel from 35 to 43. Higher time frame chart, simply a bear breakout and a pullback, and the bear breakout is probably going to get a second leg down. On 45, the interesting thing about 45, well, you can see it tested the breakout point, low of bar 36. And also 44, it's a leg 1 equals leg 2 measured move. So a couple of reasons to expect sellers at the high of 45, breakout point low of bar 36, leg 1 equals leg 2. And then big picture, this is simply a bear breakout, pullback, and then the bears are expecting a second leg down. The bulls are also expecting a second leg down. Anybody who bought back here got trapped by this sell-off, and they're disappointed. And so the bulls are selling here as well. And anybody who bought 44 for a bounce, looking for a scalp, made their scalp on 45. Strong breakout and follow through, resuming down. Strong breakout or tight bear channel, breakout on a higher time frame, pullback, second leg down. I'm always looking for leg 1 equals leg 2. Measured move targets. We got there on bar 47 here, but strong enough momentum. Does that mean you simply put a limit order to buy there? I think buying back shorts here is reasonable, but to buy to go long, it's a little aggressive. You have a pretty strong micro channel here, pretty strong breakout here. We have to go lower before we find buyers. We're still in the middle of the range. The bottom of the range might be way back here. And like I said, we might be only in the middle of the range. So we might find some profit taking, but not ideal to simply put a limit order to buy here, just because it's a leg 2 measured move. Bear breakout continues to grow. The odds are it'll get a second leg down. The first reversal up will fail. Traders can sell and sell above bars, sell above 49, sell above 48. Is bar 50 going to reverse this sell-off? Probably not. But once again, we have to think about the context and look to the left. The bears, they got their leg 1 equals leg 2 measured move. So possible second leg trap as the market tests support. But bar 50 is not a high probability buy. You have a small signal bar and it's against a strong bear breakout. Bears might exit above 50, or they may hold short expecting some kind of second leg down. But if we start to go sideways here, more and more bears will probably give up because we might be testing support. The bar 21 high is support. At the time when the market was falling back here, it was a tight bear channel, and bar 21 was a strong bear bar, and in general that's going to be a reasonable place for bears to enter to go short. So anybody selling with limit orders above bar 21, they got trapped by the bull breakout, and that creates support in this area. You can see the first reversal attempt failed, 51. Bears get a small second leg down, breakout, pullback, second leg, but now we've entered the channel phase. There might be buyers below 50. And we start to go sideways for 4 or 5 bars here. So the more we go sideways at support, the more bears may look to exit shorts, but still no good buy signal here. 55, a bull breakout bar. Good for the bulls, but it still might be just a tight trading range through here. But then we get another bull bar, even bigger body. So the bodies are growing. Bull bars closing above the bars to the left. Now this is a strong enough reversal that you have to expect a second leg up. And anybody selling down here got trapped by the bull breakout. So now expecting a second leg up, it looks like we are reversing up from support. I said it was low probability to buy here, low probability to buy all through here, tight trading range, no good signal bar. Wait for the breakout and you get higher probability, but worse risk reward. You always have that trade-off. So now your stop is down here, you're entering up here, but you have a breakout, and the expectation is a pullback and a second leg up. Now we might hesitate here. Another strong breakout bar, but as we test a breakout point, the bar 45 low, before the strong bear breakout, we may hesitate here. But look at this 3-bar micro channel. It's about as strong as it gets. There's some tails on the bars, but they're small. Every bar closing above the high of the prior bar. The body's getting bigger with each bar. The odds are the bull breakout will get a second leg. Big picture, remember back here, this swing up, even though we pulled back here, it's a tight channel. It's a breakout on a higher time frame. Just like I said, this tight channel, 35 through 43. This tight bear channel is a breakout on a higher time frame. Well, this tight bull channel is a breakout on a higher time frame. It might simply be a bull breakout, a deep 2-legged pullback, and then a second leg up. That's the way I see it. So always in long. It's probably always in long, 50, maybe 55. And then certainly your follow-through bar, 56. Always in long here. The market's probably going higher. And you can see a pause, 58. But 58's a weak reversal bar. Too much momentum to be selling. Low probability sell. Traders will probably buy the close or buy below 58, expecting a second leg up. Once again, I'm always looking for that leg 1 equals leg 2, measured move target, starting from either the pivot point or the first breakout bar, so 55 to 57. And that leg 1 equals leg 2, measured move, takes you right to the high of the day, resistance. And that's where bar 61 found resistance and reversed down. Bar 61, it's a good looking bear reversal bar, but it's not a high probability sell. If you're selling 61, relatively small risk, big reward, but selling against maybe a 7-bar bull micro channel with a lot of strong bull bars, so not ideal to sell below 61, but the location is okay, top of a trading range. I should say the location is good because we're testing the top of a trading range. And the signal bar is okay. Bear reversal bar closing on its low. So I think 61, bulls exit longs below 61. Bears have the option to sell below 61, or they can wait for the breakout to increase their probability, very similar to back here. In this case, we get the breakout on the next bar, 62. Strong bear breakout. It's always in short. Second leg down, likely strong reversal and follow through. Trapped traders up here, so you can sell, scale in, expecting a second leg down. Is 63. This small inside bar going to reverse the selling? Probably not. You can expect sellers above. And the bears getting their second leg down. Breakout, pullback, second leg. Now it's a tight bear channel. Probably sellers above 67. Is 69 strong enough to buy? Well, it's a tight bear channel. Maybe it's a 50% pullback of the rally. So reasonable to look buy here, but it's a tight bear channel. So not ideal, not yet high probability. There might be more sellers above 69. 69 may have even gotten its leg 1 equals leg 2 measured move. If you look at a lower time frame chart, it probably rallied, then pulled back, and then rallied. Not for sure, but even if it didn't do it on bar 70, it got there on bar 71. So the breakout, this is the fractal nature of price action breakouts. Most breakouts get second legs, equal in size to the breakout in the same direction. That is, most breakout signals get second legs in the direction of the signal that are equal to the size of the breakout. So bar 69, that's a bull breakout. Close near its high, breaking above the prior bar. Not ideal because it's against a tight bear channel, but even this one pulled back and got asymmetrical second leg. Leg 1, pull back, leg 2. Bulls know that if they're buying, they're scalping because they're trading against a tight bear channel. So the bulls can buy and scalp out. And the bears, they're still looking for a second leg down. Leg 1, pull back, leg 2, target down here, which takes you to support. You can see it was a minor reversal, became a bear flag. Looks like resumption down 73. 1, 2, 3 legs down to support, but 75 is a bad stop order buy. Doji bar, not a lot of buying pressure through here. Probably sellers above going a little bit lower. But now we're testing support. 76 a better stop order buy. Bull reversal bar closing near its high. Did the bears reach their target? The bears reached their target. Leg 1, pull back, leg 2. Testing support, so I would not sell here. 76, bears can exit, shorts above 76, bulls can buy. Not yet high probability, but good risk reward and context is reasonable. Bear channel, testing support, it makes sense to buy here. We started to go sideways, bears unable to break below support. And we just ended up going sideways into the end of the day. What about this rally? Strong enough rally, we'll probably get a second leg. Maybe this is a wedge bull flag. Breakout, pullback, maybe we get a second leg up, but we just ran out of time at this point in the day. Let's go through reasonable stop order entries today. The gap down and the strong breakout bar on 1, well below the prior day's low. You probably sell the close or sell below bar 1, expecting at least a little more down. Bar 3, testing support. Until that gets followed through, it's not ideal to sell bar 3. I would not buy here. The first reversal, probably going to be minor. 7, also not ideal. Maybe the middle of a trading range at this point. After the big down, big up on 3 and 4. 12 was not a high probability stop order buy. I thought 18, selling below 18 was okay. Double top, bear flag, the bar closed below its midpoint, or wait for higher probability. Sell to close 19 was reasonable. 23, that's a reasonable stop order buy. 24 is okay, but you're buying near resistance. 30, that's a stop order scalp. you're probably sellers above 28 or the bar 1 high. 35 is a reasonable stop order sell, not high probability, but bulls probably exit below it. Bears can sell, or they can wait for the breakout. 37, that's a sell. 38, you can sell the close of these bars. Always in short, expect a second leg down. 46 is a reasonable sell as well. We have a bear breakout, pullback, maybe get a second leg down. Some traders might call it a lower high major trend reversal. Bull trend, trend line break, retest of the highs, lower high major trend reversal. Through here, maybe 55 you can start buying or wait for the follow through bar. Now we have a breakout follow through, buy the close 56, buy the close 57. Even 58, it's a low probability sell. You can buy where weak bears are exiting. So a weak bear sells the close of 58, puts a stop above 58. They're getting stopped out. You can enter at the high of 58 for a little more up. Looking for targets up here, maybe the high close. Maybe the leg 1 equals leg 2, measured move. 61 is a reasonable stop order sell, not yet high probability, but good context. Sell the close 62. Low 1 short 65 you could take, looking for that second leg down. 73 not ideal, 3 legs down and approaching support, and then that's it. Really no stop orders through here. For limit order trades today, after the sell-off on the open, you can sell the first pullback expecting a second leg down, so sellers above 5 or 6 is reasonable. And as we enter a tight trading range, traders will buy low and sell high. The question is, where is low and where is high? I'm not sure if we got low enough for me to start buying through here, but this was acting as resistance, so traders can sell here. Maybe not ideal to sell with this momentum, but when we start to go sideways, like I said, bar 17 was a bad stop order buy, probably sellers above here. That's a reasonable limit order sell. Double top bear flag, bad stop order, buy signal bar, possible second leg trap. 20 was a bad stop order buy. You can say it's a double bottom, but small, weak signal bar, good momentum for the bears. There's a sell above that bar for a scalp. Traders could also sell above 21 or 22, although not ideal, especially if you get a bar like 23. The problem is the context, possibly the bottom of a trading range. And then when you see such a strong bar, 23, if you were going to sell above 21, you probably have to cancel the order because you're getting new information bar by bar, moment to moment. And when you get bar 23, such a strong bull bar, reversing up at support, you have to expect a second leg up. As much as this is a tight bear channel, context is, or I should say momentum, is only half of the picture. You have to consider momentum and context. So it doesn't matter how strong a breakout is. Like you can get a very strong bull breakout like over here, but if it's the top of a trading range, then the market can reverse. You can get a tight bear channel, but if it's the bottom of a trading range, you have to be careful because the market can reverse. Limit order buy below 28 or 29, it triggered on 30. 7 or 8 bar bull micro channel, weak sell signals, buy for a scalp. Limit order buy here, but I would not buy below 32, too much risk that we're at the top of a trading range. Traders may have bought below 31. Better to buy below a strong bull bar than a bear bar, but did not trigger either way. And then here, 3 legs up, top of the range. I would not take a limit order buy here. I mentioned, if anything, bulls exit below 35 and bears can sell. Bear micro channel, bad stop order buy 40. Sellers above these weak doji bars. Traders make a scalp out of it, second leg down. Tight bear channel, sellers above 43. Sellers at the breakout point I mentioned. Through here, strong enough sell-off, sellers above 50, but not ideal to sell above a good bull signal bar. the odds were the momentum was strong enough the first reversal up would fail, but we are testing near support, so not ideal, kind of like back here. And then no limit orders triggered through here. I would not buy below 61. Maybe traders buy below 60, but still you're buying closer to the top of a trading range. You don't want to buy at the top. Limit order sell above 64. Strong reversal and follow through. Expect a second leg down. You could sell above 63 or 64. Looking for that second leg. The breakout pulled back, got a second leg. Now it's a tight channel. You can sell above any reversal, expecting the tight channel to get a second leg down. So sellers above 68, sellers above 66. I don't know if we quite got there. And then as the market approached support, there's 3 legs down in a channel. As far as through here, it started to go sideways, became a tight trading range, limit order market. Because it's 3 legs down to support, I thought buying below 76 made sense. And that's about it. That's really all that really triggered. 78, maybe an inside bar. You could fade that breakout, buy below. But too late in the day, logically to be trading that late in the day. But in theory, limit order market, you can buy at support and sell above bars at resistance. All right, that's going to be it for today's end of day review. To learn more about price action fundamentals and how to trade price action, I recommend you study the Brooks Trading Course, which you can find at brookstradingcourse.com. There's a link in the description of this video. All right, thanks everybody for watching today's end of day review, and I hope everybody has a good night.